Well, I mean, this will be interesting and informative for maybe next bull run, just because of play to earn game. There's a promise of crypto gaming kind of having its own, I guess, bull run and money funneling in, and a promise of, intertwining the two. And we'll see how this one plays out. And I think a lot of people will learn and invest based upon how this actually plays out.
Welcome to the Alfalfa podcast. We're back for another episode. We're one short again. It's a busy time of year.
But we've gained.
We're
an
back,
old
baby.
friend.
We've gained the algo.
God,
We've
I missed you guys.
We've lost Eric, though.
Get ready for a more quantitative
Yes.
episode.
Very glad you're back, Nick. You were greatly missed.
I've missed you guys in pod life and in real life.
So did you basically side channel Eric and tell him how great France is, and now he's there?
I did
instead
feed
of
him
you?
some alpha, fed him some cafe alpha, mostly Instagrammable cafes for his wife. Really gave him what he needed for that trip, which is serve up some Instagrammable moments for the wife.
Mm-hmm.
I think both of them will give 5 stars for the recommendation.
The ladies appreciate those photos, man.
Yeah.
They really do.
I appreciate the croissants.
Yeah.
They'll appreciate the photos.
Yeah,
Everyone's happy.
So the France alpha is baguette life, right?
Oh, yeah. Me, my cousin, his girlfriend, my girlfriend walking around, and we, grabbed a full multi-foot long baguette, threw it in the back pocket while you're walking around, and we just ate that thing, piece by piece, and then you wander by a cheese store, and you walk in the cheese store, and you tell them, I have a baguette, but I have no cheese. Then they recommend cheese.
Camembert.
Yeah, and then you walk by an olive oil store, and you show them the baguette, and like, I don't have olive oil, and then they hand you olive oil. And I got like little travel bits of both, cheese and olive oil. And we just cruised around from wine place to wine place.
So the baguette is like a vehicle for experiencing all these flavors and pleasures of France.
The carbs in France are,
They hit different.
oh man, they have like flavor profiles like wine. This is what you feel and smell at first, and then it finishes off with a whole new flavor.
They seem to not make you fat either.
Yeah, and I tried to separate that as like, is it the walking that offsets the carbs? I do think there's something in it because you definitely don't feel like crap.
The great French paradox, man.
Yeah.
Carnivore Aurelius talks about this.
I don't know if it's a French paradox.
No
Maybe
seed
a
oils.
USA. Yeah, there's just nothing.
Simple ingredients.
I think we
Locally
need
made.
Carnivore Aurelius on this program already.
Dude, what does he look like?
He's had enough free press.
Is he our age? I don't even know who he is.
I always
No,
imagine him as
be
like
great.
a bear.
Is he? I just think of him as the taint lord. Just the taintest taint. Not just west of that's me, west of the Mississippi. Tanis taint. He's just like taint god.
He's too caveman to have any practical conversation with. Likely.
I don't know.
Proven wrong.
I actually, if you look at his post, I think he's an intelligent dude. I think he's
show up with like raw eggs and
80% of
I
what he's
don't know.
saying is fascinating.
All right.
Okay, so
I'm in.
speaking of Eric, we miss you. It's funny, Eric was telling us last week that somebody from the community reached out to him, took the effort to look into what he does outside of the Alfalfa podcast, which is that he has his own wealth management services fund, and reached out to him, talking to him about, hey man, love the pod, love what you're doing. Can you help me out with my crypto? And he does do that. So I thought we would actually take a moment to shout out Eric and Scope Wealth Management. What's the URL?
Yes, scopewealth.com. I mean, they manage family office money, high net worth money, ultra high net worth money in the TradFi world, but also in crypto as well. I know they've certainly done a great job with some of our friends who have had a lot of options or shares in high growth tech companies. Like even simple strategies is hedging, because that often as you go in that career path, it becomes a high percentage of your net wealth, and you want to watch that grow, but you also want to hedge against it. So like even advanced strategies like that to hedge against there. I know he's done a great job with that kind of stuff too.
Yep, and you and I have worked with him in the past before as well. I mean, you guys obviously know him. If you listen to the pod, Eric's a brilliant guy. So yeah, check out scopewealth.com. You can reach out to Eric directly there if you want to chat crypto or TradFi or whatever, and he'd be happy to help you. Thank you, Scope Wealth, for sponsoring this episode.
Yeah, Eric, that'll be $20,000.
Yeah, I was gonna say,
At least we're warming up.
Yeah.
This is our
Get that invoice right over to you.
We're warming the sponsors up for you guys. I do have one more ask as well, since this came up in the Discord. Somebody was saying like the last episode was their favorite ever, which is always so heartwarming and kind when you guys say stuff like that. And it was like, how can I help? So we asked him, go leave a review. So you guys as well, listening, watching, go leave a review on Apple Podcasts and Spotify. You can leave a rating on those two, but on Apple specifically, you can leave an actual, text review. So throw something funny. We'll read it out on the pod, and I always appreciate those as well. They make a big difference. They help people discover the pod ultimately. Cool. Anything else? All right. Who's the SEC suing next, Steven?
We have an Alfalfa round.
Oh, I forget we do those.
God.
I have a backlog to get through. That's why I've been
Okay.
thinking about it.
All right. Hit it.
Okay, so I had a few things to go over, so I sectioned them off. So in the long stock portfolio, let's call it that, on Monday I sold off what Stanley Druckenmiller calls stale longs. Like when you diversify so much, you just have 1% over here,
Why do I own
2.5% over here, and just kind of forgot them, don't give them as much attention as they deserve. So I gave them the attention they deserve, and I sold them all. And I bought ticker symbol SH, which is the inverse S&P, on Monday. So another way to
Look
offset
at you, buying the bottom.
Yeah, probably
of the inverse.
But I also I hope so. But I'm also again hedging against JP Morgan's active management, just fading them left and right. And
All right.
yeah, I mean, they're just not. I mean,
There goes one sponsor candidate.
JP Morgan Private Bank is now off the table. Yeah, I think my relationship manager doesn't take offense to it. He's not the one actually managing the money, but certainly don't like their drawdown risk management. So I'm doing it myself. In the, let's call it the tactical portfolio. It's funny, I give names to the portfolio while I was writing this. I added a leverage short on Cardano. I believe that was last night. And then I added more to puts. So this is recorded on Wednesday, October 12th. There's a CPI print in about 12 hours. So it's going to be interesting one way or the other. Those
I always love seeing how these age immediately.
yeah, it might go both ways tomorrow. It might go really up, really down. We'll see.
Might
how it goes.
liquidate you and then go down. It's
Yeah.
always fun. Yeah.
Anyway, so that's there. And in the crypto portfolio, Lido started offering some rewards to liquidity providers on layer 2, specifically Optimism and Arbitrum. So I chose the Balancer Arbitrum ST ETH pool. Obviously started off at some ungodly APY. Right now it's hovering around 10%. I think it'll settle in around 7, 8, I don't know, depending on. There's about $6 million in the pool right now. I chose that I wanted to buy, LDO tokens at some point, maybe in the future. So I don't mind getting paid in their tokens for some little rewards for things I was gonna hold on a layer 2 anyway. So anyway, that's the list of things that happened last week.
Sweet.
Cool.
Well played.
Tanks. We'll see.
Yeah, I got a couple things on my mind this week. I mean, haven't made any new plays, but yeah, I've been I don't know, I've been kind of bored, I guess. So I've been doing dumb charts. I threw up a chart today of Cardano versus Facebook, and it's a larger theme that interests me. I was looking at a lot of stocks, ARK comes to mind, and we have basically already run the COVID lows with a lot of what people might consider to be kind of premium tech stocks. Maybe ARK isn't one of those, but Facebook or Meta, whatever the hell it's called these days, it certainly is, right? So Meta has run its COVID low, and it's about to take out its 2019 low. But most of crypto hasn't even taken out its 2021 open yet. Cardano being one of those coins. I guess we're just dumping on Cardano the last few episodes, so let's continue it. But
you were dumping on Tesla through Cardano, but yes.
I mean, Tesla needs to go down more too. But yeah, it's just part of this picture to me where it feels to me although crypto capitulated very quickly in a particular way, it seems like it didn't fully capitulate. And it now feels like a lot of the TradFi tech world is way ahead of crypto now. So I'm wondering if we are going to get this catch up period. I wonder if Bitcoin's going to teleport to 12K, and a lot of these alts are going to why should Meta be trading at 2019 levels when Cardano is still at 2021 levels, or not even? It doesn't make a lot of sense to my brain. So got my eye on that. And then the other just sort of shift I had this week, can't remember where I heard this, unfortunately, so I'm just going to plagiarize. But is it plagiarizing if you say you're plagiarizing? But idea I heard that was like really good for me was the idea that this period is sort of like the 1970s and the inflationary battle, right? And like the big wedge back then was like the price of oil. And we talk about it a lot today, but that's like not actually what the issue is here in the US right now, especially. Today's oil is labor, it's wages, unemployment. So that's like shifted to be kind of like my main focus in thinking about where we are in the cycle and when a pivot is coming, which seems kind of weird and perverse. I'm kind of waiting for people to become poor and unemployed, I guess. And that's when the stock market can go back up again. But that to me is like the domino that has to fall of all the other million variables I've been looking at. So
Can we spend 2 more minutes on the fact that Bitcoin and ETH have kind of hovered above their lows while the rest of the stock market has taken out their lows? Because that's been something that I think a lot of us have been keeping our eye on. And I think typically we say that crypto kind of leads the equity market, public equity market. So it's interesting to see what happens here. I did notice that while the S&P 500 kind of crept below its net liquidity fair value, Bitcoin is either at or slightly above. So trying to figure out who's ahead of who. Is crypto still ahead of public equities, and we might see some mean reversion, I guess, for the S&P 500, or is net liquidity just going to continue to go down and both will go down with it? And I don't know. Do you have it? Do you have a thesis on why we're seeing this?
I think of it as more of like like crypto is just sort of like higher beta. And I think you can see an example of this within crypto. So between crypto and stocks, right? You're like, oh my God, stocks are making new lows and Bitcoin is still at its summer low. But within crypto, like Bitcoin is at its summer low, but there's a million altcoins, like Matic, for example, and Atom, 2 coins that I am, the opposite of long on right now. Those are way above their summer lows. Right. Is it because they're quote unquote stronger, or is it just because like they have kind of higher beta within crypto, and then once stuff goes the other direction, it's other things. So I'm like very, I get very scared when everybody's throwing around this like decoupling narrative, or it's just, I get like PTSD about that. I just assume it's all going to go to hell until proven otherwise, because that's what it usually does.
Yeah, I'm kind of in the same train. I think like there's just variability between where these both trade in fair value to, the net liquidity function. And we're just seeing a little bit of that. I mean, people on Twitter have talked about there's just a massive bidder on FTX, like holding things up.
Allegedly. Yeah.
Allegedly. Could certainly be that. I'm not one to like dive into those kind of like on-chain or just money flow things between exchanges. But certainly with you. I mean, I'm betting on the downside, and I hope Cardano just falls through that big, large, empty space under the chart.
Fuck you, Charles.
Yeah.
Fuck you and your stupid coin.
All right, cool. Armand, you want to
Sure.
go through yours?
Yeah, good shit, guys. All right, I actually have a money/crypto one, a little update,
nice.
and then a life one, of course,
as
well. So, crypto one. So one of the first projects we ever talked about on the pod was Wolfgame, and Wolfgame is slated to launch its full game in Q4, and it's been on a nice, pretty little run there. Wool, the currency of the game, is up to about 7 cents, between 6 and 7 cents right now, is the day we're recording this.
I almost made this as a trade too. I was watching this stupid chart.
I've been buying a little wool in preparation.
Oh, you're woolish.
Yeah, I mean, I kind of like 3x the wool over the last, I don't know, couple weeks or whatever.
I like this.
But what I also did is I took the wool that I had, and I've started peeling that off and moving actually some of it into just straight up like stable coins. Because I do think wool will probably outperform ETH in the short term as we move toward the actual game release. So I actually like wool right now. But I also want to cash out as well, because I didn't the first opportunity around. I also started selling some assets that I still have, like land, which I think is hovering around half an ETH right now, for like basic land. And I'm looking at selling my wolf pretty soon. Anyway, I'm sharing this because I think there's like 1.7% of our audience that might be involved in Wolf Game.
or involved in other NFT projects that similar have,
Yeah, totally.
It's
But
nice
this
to see hope in the NFT.
This
world.
project is very important for what it symbolizes because I think depending on how this full game release goes and how the actual sort of market of Wolf Game itself plays out, it will be very it's very indicative of how it'll play out for all the other sort of what we're calling play to earn games.
Yeah.
And I'm still woolish. And it's been months of just sitting back and watching nothing happen. And, as we know who've been involved in it, they've set up these little mini games along the way to keep you involved and staked in the game so that there isn't this like mass liquidation event. I'm still staked in like the alpha game. So there's a lot of reasons to stick around, especially going into the release of the full game. And I will be mostly selling. And that is mainly because I kind of missed the opportunity to do so earlier. I will be keeping, I have like a bag of like 500,000 wool, which is worth quite a bit, man. It's actually worth quite a bit. And if it goes back to being worth 25, 30 cents, that's pretty significant. So I'd like to hold that because it also has an automatic vesting schedule. So if you're woolish, if wool just keeps on increasing in value over time, and the wool itself in your wool pouch, this probably makes absolutely no sense to someone who doesn't know what I'm talking about. But imagine you can buy these pouches of the game's currency and they're locked. But just like company stock that you're given or equity that you receive, it vests over time. Yeah. And so once it vests, you can then sell or do what you like. You can use the currency. And so I can imagine that this is going to be a good scenario over the long run if you stay patient.
That chart looks
good. I could see wool at $1 in the near future, next year or something like that. Once the game is rocking and people get excited about it, and if you wait 2-3 years, I could see wool in the dollars. And that's really significant when you're talking about that much wool. So that's kind of my plan of what to hold in the long run, but to sell the actual assets.
I forgot. I sold one of the lands. I got like one of the rare ones, and I sold it. Probably a little too soon, but I was like, I just want to.
Yeah, because it's doing really good right now.
Yeah, exactly.
I actually don't know what happened like 2 days ago because I've had my hands full, but something, I think maybe the shepherd said something and people got really excited about land.
Well, I mean, this will be interesting and informative for maybe next bull run, just because of play to earn game. There's a promise of crypto gaming kind of having its own, I guess, bull run and money funneling in, and a promise of intertwining the two. And we'll see how this one plays out. And I think a lot of people will learn and invest based upon how this actually plays out. But I'm with you.
It's very
on
important.
Sell into the pre-launch of the game. And then let the game kind of prove itself over time.
God, amazing chart though. I think it's like the dollar and then wool are the best charts in the world right now.
Yeah.
Well,
I've never seen anything like
amazing.
it.
Here's the thing about just really quickly on these that I think is going to play out in Wolf Game and might play out in some of these crypto games in the future. If they are not adding new users, more nodes to the network of their game, it's hard to increase the pie for everyone. So unless this game shows a way to bring on new people in, which is going to be tough during a crypto bear market, then it's strictly a player versus player game. Like if we're both involved in this community, it's me versus you on who's going to buy and who's going to sell at the right price. So for people listening who are in similar projects, I think you have to keep that in mind, that it's a player versus player, not just in the game, but in, trading these assets essentially.
Yeah, that's a good point to make it like to make this example of this game applicable to other projects. I am trying to figure out like one small thing in this game, like are they going to let you unstake from alpha game before the full game release? Because if you unstake, you lose all of your earned wool, and I've earned hundreds of thousands of wool.
Oh, you're
right.
still forgot about that.
I'm still staked.
So
I unstaked everything.
What? No, because I've earned hundreds of thousands of wool.
Well, I dumped it all like 11 cents, though.
By the way, that's in addition to the wool I'll earn from the place that alpha wolf is.
You pick Gary V's
I think we should move on from Wolf Games.
Money. Sorry.
This is too.
I'll talk to you offline.
Yeah.
We can talk about Ponzi-nomics.
Yeah.
Well, we
it's a
can.
great topic.
If this thing launches into a potential SEC NFT
boy.
investigation transitioning.
But it won't, and we'll get to why.
Okay.
I have a take on that.
I wanna hear your take.
So I don't know who's introducing this, but I'll just go.
I have one more.
Okay, go.
Hold on.
Oh, you have a life alfalfa.
Yeah, I have a life alfalfa. So you guys know this, but audience doesn't know. So on the 1st of October, I was on Instagram. I saw a post by Joe Rogan, and it was him looking funny, sweating his face off, pumping iron, talking about sober October. And I remember he did this last year, and I was like, wow, that's really intriguing. I've pretty much never gone sober for that length of time. And I don't drink often, but it's at least basically 2, 3, sometimes even 4 times a week. And I was like, okay. I saw this post and it was really inspiring in the moment, honestly, just the way he positioned it. He's like, not only do we have no booze for the month, but you also have to burn 500 calories actively exercising. Sly's going to kill me. I'll leave it down. 500 calories actively. You have to exercise through some kind of activity and burn. So no booze and every single day exercise. Now, I've been on this plan. I started that day. I was just like, fuck it, let's do it. I've never done this before. First of all, I have so much alfalfa that I could sit and share, but I have never felt mentally sharper. I'm on 3 days of no sleep right now. You guys know this because I've been going through a bunch of shit. Everything's fine, but I'm still here and I'm able to participate. And I would never, ever would have been able to do that if I was getting the sleep quality I used to get, if I was drinking the way I used to drink before. My mood is more stable. My brain is more sharp and unfoggy. I could go on and on. And what I've realized is it's the big domino. You don't have to soak it up with junk food after you drink. You get quality sleep. You wake up, you go get the exercise in. You get the work done earlier. You have time to read the books and do the things you want to do in your day. And I didn't realize how much time it was taking from my life. And look, I love alcohol. I love to have my red wine, my booze. I love the bourbons and the whiskeys, but this has been a phenomenal experience. So what I would say is I'm only 12 days into this. You don't have to wait for next October to do this. For anybody who's never done this before, start today, if you want to, or tomorrow, and just go 30 days. It doesn't matter. It's just an arbitrary title. We call it Sober October, but call it Sober 30 or something like that and try it. But in addition with the exercise, that's where it's like, wow. And I've missed the last couple of days because of some stuff I've been doing the last couple of days with the exercise, but still incredible.
500 calories a day is no joke.
No, it's not.
It's not easy just to quick pop exercise.
It's also not as hard as you think. I can do it in 35, 40-minute jog. So it's not that bad. Or you just go play some pickleball for 2 hours with Steven and he'll call. Yeah, okay, we'll leave that shit talking aside. All right.
So, lot of paddle.
There's a lot of paddle shit
paddle ball shit talking and text threads.
I'm
these
very
days.
good at pickleball.
Okay, let's continue.
Let's continue and talk actual facts. That was misinformation, everyone. Misinformation
Minus
icon
$2,500.
Oh, shit.
Sorry, next episode.
Okay,
I could beat you left-handed and you know it.
Okay, Steven, focus. SEC's doing what?
It's charging you with misinformation.
Uh-huh. Yeah. So, SEC and Yuga Labs.
Oh, am I bringing that in?
Yeah.
Oh, all right. Sure, I can do that. The SEC is investigating Yuga Labs into the allegations that something they're doing is some type of security. Seemed kind of vague. They didn't specifically call out the coin, right? It was kind of like maybe the apes are securities, maybe the coin's security. I don't know. I feel like they like
I have one which I think
broad
could be
yeah
out of the three. Just to finish off in your summary, it's an investigation, not a lawsuit, right?
Yes.
So it's not like they're alleging anything.
You're looking into it.
Yeah, and I think Yuga issued a statement, something like, "We're looking forward to educating them on Web3." And I've known people who've cooperated with the SEC, and it's an antagonistic thing. I mean, they're not there to help you or learn.
You don't say.
Yeah, I hope I'm sure they're well-funded lawyers are guiding them in that process. But in any case, at first I was like, the NFTs themselves, I don't know if the apes themselves. Then I was like, well, but the coin. But then I looked at the Howey test and I was like, not the coin. And I settled on something else. So just a reminder of the Howey test. There's, I think, roughly 4 of them. It's an investment of money.
I know what it is.
A common enterprise, a reasonable expectation of profits, and fourth, to be derived from the efforts of others. And I quickly landed on the land.
I knew it.
The land
knew it.
could be argued that it's a security. I'm not saying that I want it to be, but there was a clear investment of money. I mean, I think it was like over $5,000, per piece of land. Granted, some were airdropped, right, to some holders. Okay, but some of them you could be purchased. A common enterprise. I mean, the Howey test was based on a land-based investment, like a physical land-based investment. So I don't think there's any issues with that one. Like all these lands are tied together, granted in the metaverse, with a reasonable expectation of profits. I think that's safe to say, although no one's made any profit. And the last one, to be derived from the efforts of others. This is typically one of the more tougher ones to prove, but they are. I think the holders of the land are certainly reliable on Yuga. And I think there's two other companies, Animoca, which one I'm familiar with, and then one I'm not familiar with, which is Improbable something. They're also involved in this. And I tried to look at other comparisons in the NFT world. And in this case, if Yuga and Animoca did not build on this game metaverse, they would lose money. Holders would lose out on money.
And that's essentially what that fourth point hits at, right?
Yeah. But then you could go to I'm looking at an art piece behind you. You look at an NFT artist. If that NFT artist didn't create a subsequent art collection, it'd be fine.
No,
you're
they're
not
not obligated to. You're
Right.
buying that art for that art, and that's it.
So in this case, and we might start to see a distinction between not just an NFT, but an NFT that's art, an NFT that's land sale, potentially a security.
Good analysis. Why not
Collect-
ApeCoin?
ApeCoin was airdropped. There was not necessarily...
Yeah, but not all of it.
But it wasn't necessarily like, Yuga, I'm going to purchase ApeCoin from you. And I could be wrong. I wasn't involved, I wasn't a holder or involved in this project or didn't invest in it. But there wasn't like an exchange from me to Yuga. Now, certainly you could go buy that on an exchange, a decentralized or centralized exchange. But I don't think it was like from the investor to Yuga money exchange.
Because you have to classify pretty much every token that way if you...
Right. I mean, that's where, and I will say the law firm. Oh no, this is sushi related. I'm getting my two things mixed in my head.
Keep it in your pants.
Okay. I'll keep it out of the stables.
Thank you.
All right. Okay. But anyway, that's kind of my view on is that we could quickly see them eventually get to talking about the land sale. BlockFi got penalized for not registering their offering. It was a $50 million one. So I'm not sure how long it's going to take or how big the penalty may be, but it could be something that is brushed off and then kind of starts the conversation thinking about not NFTs, not just as NFTs, and we start bifurcating them into categories potentially.
Good analysis. The algo is back. Dude.
He's back.
Yeah. That's good. What do you make of all this, Stephen?
Oh God, I have to follow that.
No, just give me your,
I'm just sort of struck by the vagary of it all, right? Like, okay, so it's very easy to say oil is not a security, right? Because there's no, I mean, I guess you could argue that there's a group controlling oil and maybe it's OPEC or something, but there's actually a very specific carve out in the regulations or the guidance or whatever you want to call it because it's so vague, where it says that like profit is not the equivalent to number going up, right? Like so if you have an asset and it goes up just from sheer market supply and demand, it's not like necessarily quote unquote profit. That doesn't like fall. Let's say, like commodities are a great example of this, like copper. Okay, like price goes up, you buy it. Well, it's not security. It's just going up because of market forces.
External
There's no
market
sort
forces.
Of central entity controlling it. But where this kind of gets like vague to me is like what about like luxury watches, for example? There are a lot of luxury watches that people buy under the premise that like they are stores of value that appreciate over time. They're like limited editions and like there are many brands whose watches tend to go up over time. I have a Rolex and it's worth a lot more than it was when I bought it for like 10 years ago. Now, that's like supply and demand to a degree, but all prices are, right? But are we to argue that like my watch's value is not really incumbent on the Rolex Corporation like doing stuff, right? Like if you buy a Charizard card or something, right? Is that not like reliant on whoever created that intellectual property to keep pushing it, like making new shows and distributing it? Like, doesn't that like, so I fail to see like where this distinction actually happens.
But you could also argue that Rolex ceasing production, literally doing the opposite of promoting it, doing nothing here on out, even going bankrupt, could increase the value of the watch. So like whether they do great promotion or no promotion doesn't really necessarily matter. And I think there are other forces at play, like amount of liquidity in the economy could be a bigger thing with the value of Rolex watches. We've seen high-end watches go down in value. Probably a good time to buy one if you think it's a store of value.
But isn't there a reason though why luxury brands spend like $1 bajillion on like advertising? Like for the most part, they don't just put something out and fade away into the ether and be like, all right, you buy it.
Well, I mean, what do you think about this? I mean, I think a couple of years ago, like when a lot of these tokens were coming out, to be like, oh, we're not a security, we're a utility token. I heard that a lot, and the utility doesn't come up in the Howey test at all, but that was like often a narrative that people would use, like we're a utility token, we're used for other things. Does it matter that Rolex, the watch, is actually a utility, the high-end purse is a utility, or is that not part of this conversation
utility
at all?
tokens to me are actually safer than something like apes, in my opinion. Like everybody is buying an ape under the auspices that Yuga Labs is going to do a bunch of shit to make your ape go up in value, right? Whereas like there are utility tokens, like I've purchased utility tokens for pieces of software that I wanted to use, for example, and I was just like, I just want to use the software, and I need the utility token to run this software. Charge it like micro transaction charges me to do everything in like this charting software or something, right? So to me, that's like more defensible than like Bored Apes are not securities.
Right. I mean, listen, I did mention that land, I think, could be classified security, but there's also several arguments that why it isn't. I think the non-fungible aspect of it is one. Like Apple shares are fungible. You can move them back and forth. But when you have several things that are not the same, how can you classify them under like one security? That I see logical complications with that argument when they're actually different.
What if Bored Ape Yacht Club was just 10,000 apes that were like literally identical, even though they're all technically NFTs, but they're basically interchangeable because they're the same? Like, does that make them,
like ApeCoin is a fungible token, right? Like you're saying, I think it's much easier to classify that as a security than a non-fungible one.
But isn't there like a point? Like, what if Yuga released 100,000 Bored Apes and they were all exactly the same Bored Ape? They're completely the same, thus sort of making them fungible, even though they technically at the root
that's a
level
good point.
are.
I could see that.
Are they securities then?
Maybe.
I don't know. I'm not a lawyer. I'm talking out of my ass here, obviously, but like these are things that are going through my head.
I'll add on another aspect of it. We've seen like the financialization of NFTs, where you can take a CryptoPunk and fractionalize it into shares and buy a share of a NFT. So I think the fact that you can start to financialize these NFT projects adds another layer of bait for a regulator like the
Hester
SEC.
Pierce has like come out and directly said, "Don't fractionalize the NFTs.
Oh, really?
That's definitely a security." Yeah,
Okay.
like that's that. It's funny you bring that up because I don't know. There seems to be some vagary where when you get to a certain amount of fractionalization or fungibility, it's not like a hard line. Then it suddenly magically transforms into security. I don't know. Like the main takeaway I have from all of this is that like the old laws are just like woefully unequipped to sort of like govern or describe like this new kind of universe that we live in, and it's kind of annoying, to be honest, that there's no clarity on it. I mean, we've got multi-billion, like you guys worth billions of dollars, right? Still,
well, there's certainly a large market share of the entire NFT market. I think it's over 20%. I mean, they have own
just operating with no guidance. Basically, it's kind of wild.
So that's an interesting trade-off because it's like I'm really with you, Stephen. I think the vagary, good word, of the whole
Is that a word?
Well, that's the word you used. Yeah. Please Google that. If not, add it to the dictionary.
It's my fault, sorry.
I think that says so much. You're entering a new space, Web3. All these companies and all these individuals that are creating these projects, which simply started as like generative art or the idea of an NFT in the first place, or some artist like actually coming on and putting their art on the blockchain. And then it's become something as crazy as Yuga Labs, which like usurped CryptoPunks out of nowhere in the span of like such short time. And they've done all of this without any guidance. They don't know where they're stepping and encroaching in the wrong direction. So imagine you're the entrepreneur. Imagine we're the entrepreneurs. Imagine we're the founders of Yuga. I sympathize with them because it's like you want to build a game-changing project in the fastest growing space the world has seen in quite some time. You don't know where the landmines are. You try to decipher the laws from the SEC's side to the best of your ability. You probably are constantly asking yourself, should we get in touch? Should we do and then ask for forgiveness? Should we navigate? Should we, how do we navigate this? Do we hire the biggest shot lawyers that we possibly can? Yes, that's typically what companies like this do, especially after they raise a bunch of venture capital. And you're going along this path, and then all of a sudden, where I really sympathize is this. Who's under investigation right now? Yuga Labs. Who's number one? Yuga Labs. Being number one, being the biggest player in the space.
Me, sir.
Well, they are.
Excuse me. Do you know who's sitting across the table from you here in multiple directions?
It doesn't matter. They literally acquired your punk and are going to turn it into an ape.
It's a valid argument. I have no further.
Literally, all punks are going to have monkey heads pretty soon.
I sometimes forget that I'm owned by Yuga. I just block that out of my mind.
So think about that. I know. Sad face. So think about that. It's like, the cost of being number one is that they're under investigation. This is going to either cost them a lot of money or they're going to pay the price in some way. They'll lose market share. A piece of their business will get regulated to a certain degree. They'll have to make a pivot. They'll pay the price for the whole industry, and then everyone else learns what to do. And as a result of being number 2 or number 10, they get the opportunity to now have seen the guidance, see the sledgehammer come down on number 1, and know how to navigate this more effectively. So I actually sympathize with companies like Yuga Labs in this situation.
Yeah, I mean, I think they were definitely ready for this. I mean, they had the Fenwick special. Fenwick is a popular, probably the most popular law firm when it comes to NFTs. They got the Fenwick special when it came to ApeCoin. I mean, it was like, and I've talked to Fenwick before, just hypothesizing projects with them. And it's like, okay, you have a foundation in Panama, a foundation in Cayman Islands. And I was like, wait, what? And they're like, well, you live in the United States, right? I was like, yes. Like, okay, then this is...
Makes sense.
This is what you need. And so they did
7
put the
layers
thought,
of protection.
They did that. They put the thought towards ApeCoin. So I'm sure they put the similar thought towards... the other side deeds the land. And I think, they'll probably make some kind of
they KYC'd that.
Right. So
They
forgot about that.
definitely were thinking ahead on all of it.
Yeah, I didn't do that because I didn't want to
Same.
KYC, and now I'm like,
I did. It was free. It was KYC on a single individual wallet and basically free money.
I wonder, I haven't thought about this much, but I wonder if they could take like a Fortnite parallel type argument where it's like, we're building a game and we're selling an item in a game. And just like Fortnite sells items.
I want to clarify there was free money if you were airdropped. It was not free money if you went and bought the shittiest launch ever.
Yeah.
Because you definitely lost money on
terrible.
that. It was terrible.
It was a great ROI though if you would have minted an ape. Anyway, should we move on?
Yeah, sure. I think I'm done with that.
All right, I can drop it.
I feel complete.
I could drop it.
Yeah.
I'll ask you about it later.
Okay. Well, wait. Now you just teased me and the audience.
Why would you do that?
No, now it feels incomplete.
Maybe ask me in the Discord about it.
Oh, no, that's cheap. No, what's your thought on this?
Nope. I'm leaving the loop open.
Oh my God. This is so unsatisfying.
That's so
it bothers me.
sorry,
I'm
guys.
sitting next
It's
to you.
probably not that good.
Yeah.
All right, Nick, where are we going next?
Okay, so should we talk a little 2% to 4%?
Yes.
Okay, cool. So
let's talk about that.
Fascinating.
It's a good topic.
a firm that's a finance firm that's well versed in crypto. I believe they're a pretty
They're
big
market makers.
market maker,
right?
yeah,
Big
liquidity
market makers,
provider
yeah.
called Cumberland. One of the guys there, I think a few days ago, threw out a tweet, and it's an argument that we've heard before that essentially we are on our path to a decade of secular high inflation. So the Fed's known benchmark target is 2%, but could we be on a decade-long shift from 2% to even 2.5%, 3%, maybe even as high as 4%? And there have been several like macroeconomists who've kind of hypothesized this over the last year. And I think we even mentioned this on our financial repression episode.
Oh yeah, we did.
That if you have an economy that's highly dependent, a global economy that's highly dependent on debt, how do you decrease that debt load and wipe off a massive amount of debt? And we talked about how letting inflation run a little hot over the next decade is probably the easiest way to get rid of that. It doesn't require the passing any laws. It doesn't require anyone's approval. No one votes on it, certainly. So anyway, this guy wrote a thread, Cumberland wrote a thread, and then it talked about the effect on crypto if we do see this Fed benchmark rise from 2% to 4%.
Has to be great.
Well, see, it goes into two paths.
Is it, and why?
Right? So one path is that they're like, well, we don't like 4% inflation. We want to get to 2% proper, 2.0%, which means that they're going to have to put the foot on the pedal more than even we've been hypothesizing on this podcast.
But this thread assumes what I think you and I correct me if I'm wrong, but I think you and I both think this is the end game, is that they go throw up their hands in the air. Hey, we tried. This is structural. 2% was kind of arbitrary anyway, right? Like we just made that up.
Yeah, 2.5%, 3% sounds great.
What about 4%, right? Which is probably more realistic. And then the 2% inflation target becomes 4%. And then when we're sitting here, a year from now at 4% still, they suddenly go.
Right. But don't a lot of people get wrecked at 4%?
But I mean, wrecked how? And like, what do you?
Their assets, the lack of their assets and ownership, like they just get wrecked. And their
non-asset
inability
holders
to survive.
Like,
I guess let's talk through first. Like, why would this sort of happen? Like, how would we get here? The reason I'm a proponent of this is because, like, I kind of think it's really hard to predict financial markets, but I feel like it's really easy to predict politics. Because you just have a bunch of people out there who are they're all trying to do one thing, which is just get reelected. And nobody's thinking in the long run. There's no incentive to think in the long run. It's just a bunch of individuals kind of doing what's best for themselves in the short run. We sort of have two paths out of this. One is like extreme pain and austerity, where we just let deflation sort of run its course and we bring everything back down.
But Stephen, no one gets elected in that scenario. Re-elected. Sorry.
Nobody gets elected. Yeah, nobody keeps their head in that scenario. Your buildings burn down and bad things happen. So it seems very inevitable to me that we do go to 4%. And let's talk about the added benefits of this for the government, right? What's really bad about what's happening right now is like the Fed is nuking the stock market, right? And I think like 50 or 60% or something of like tax revenues have been coming from stock market gains for the better part of the last decade. That ain't happening this year, right? So that's no bueno. So right now, Jerome Powell is nuking tax revenues and he's driving up the cost of funding the government, right? Which everybody sort of knows is not a sustainable thing. Like it's a bit of a short-term charade and it has to pivot at some point. 4%, like inflation target is great because now we can just let the markets run wild. Tax revenues are once again rolling in, and it gives the government a lot of leeway to actually like have interest rates that look kind of reasonable, like 3%, when in reality they're negative real rates. So the government's juicing tax revenue while running and borrowing on negative real rates. And they can kind of do that for a long time once that happens. So it seems to me like I would want to do this if I ran the government. I would totally be going for this setup. So I feel like there's a high chance that we get here. But then the question comes like, okay, once we get here, is persistent 4.5%, 5% inflation good for
no,
crypto?
too high. That's too high.
You know,
Yeah.
well, we have to assume if their target's 4, then it might actually be 4.5. But then they're like, well, target's 4. It's pretty, but we could be, assume it's even 4. Is like a decade of 4% inflation good for crypto? Is it bad for crypto? Is it neutral? Like, what do you think?
Well, I mean, there's one where they lay down the hammer and they don't want 4%, right? But let's say they're acceptable.
Let's assume they do.
Okay.
Just so we don't do this for like 6 hours.
Right. I do think there's a 1 and 1A, type of scenario. One is where they just kind of like pull back on interest rates. Do they get real rates? I mean, Powell has said he wants real rates across the curve, from 3-month duration to 10-year duration. So maybe he gets there, but let's say, we're talking about over a decade. Maybe we go post Powell and there's a new Fed chair in town. So yeah, they could certainly pull back interest rates. We could certainly see a lot of quantitative easing happening. So net liquidity go up. I think that's certainly possible. I also see a scenario where, and we've talked about this a lot, where the Fed does not do much. Maybe they keep rates a little high, they keep liquidity around the same, but the fiscal stimulus comes in heavy. And we don't have a model that kind of like brings in fiscal stimulus. So the Fed could stay flat, but we could see all different types of direct transfer payments and for debt forgiveness to kind of ease the 4% pain to the common person. And so, in that case, it's still stimulus. It's still increasing liquidity in the economy. I don't know if it's the financialized economy, but it's in the personal economies of households. And is that good for crypto? I think certainly it could be. If it's in large enough amounts. But personally, I still would like the option 1 to be bullish about crypto again, where we see net liquidity go up and the conditions, the framework for liquidity to go up in the market. And that reverse repo facility looks like the prime method for it to happen in the short term, at least.
I think we could get to a point where we stop talking so much about I'm sure we're not going to be talking about the reverse repo like 3 years from now.
No.
Probably.
It'll be 0, hopefully.
Probably going to refocus on what exactly it is that, like, I think this conversation is kind of most interesting in the context of Bitcoin because this is like the thing it's, supposedly designed for. So may as well look at that. It's like, Cardano wasn't built for, sorry, Cardano holders. But Bitcoin has lost a lot of its luster because inflation high and Bitcoin down. Everybody's like, oh,
can
Bitcoin
we talk about
bad.
this specific thing around debasement hedge versus inflation?
That's a good point to bring up.
Yeah. So, I think we've brought this up a few times, and that like CPI is not the same as debasement. Like right now we have like this opposite thing going on where prices are going up, but actually the dollar is getting stronger, right? But you could have situations where the dollar is getting weaker and prices are going up. Like these things, they're a little complicated, right? Bitcoin doesn't care just that the price of stuff is going up. Like Bitcoin cares about the money supply and the debasement or the strengthening thereof. And right now, the monetary supply is like undergoing like a strengthening. Like we are sucking liquidity out of the system, and more power is going to the dollar, which is sort of comparatively reducing the value of things that are supposed to be these like hedges against the dollar, i.e. Bitcoin. But we shouldn't get too attached to that mindset because I think we are going to very quickly get into the debasement regime again. And we could get into a regime that looks almost identical where CPI is still high, but suddenly Bitcoin is mooning again. And why would that be? Well, it's not because Bitcoin cares necessarily about quote unquote CPI, that sort of inflation. It cares about the debasement of the currency or, the strengthening of the currency. So if we enter this particular regime, right, like marking inflation to 4% as a target and then like holding treasuries at like 3% is like it's like another form of QE. You're forcing upon the economy this quote unquote risk-free rate that is negative, right? So in an environment like that juxtapose that to today, right? Like right now, if you look at like inflation forwards, it's a little complicated because right now CPI is above T-bill still. But if you look at inflation forwards, which sort of matters if you're buying like a 10-year bond or a
Right.
2-year bond, right? Those rates are actually positive right now for the first time in a long while.
Forward-looking ones.
Yes. So it's not surprising that Bitcoin or crypto in general would be getting wrecked in a positive rate environment. And like reminder to everybody that like since 2008 or so, like we have been largely in a negative real rate environment of like excess liquidity, right? So we could go back into a paradigm that looks like that where we have negative rates again. But if you're just focused on the headline interest rate at like 3%, you might be like, oh God, 3%, why would Bitcoin go up? Well, if inflation's like 6% persistently and like we're holding, T-bills at like 3%, then there's like a negative real rate in the economy as the default. Now, historically, like the common man has sort of just gotten screwed by this, right? They don't have access to many of the things that we might call like inflation hedges. Like real estate's a great example of this. Freaking great. Like if you have like a great credit score and like a fat bank account to put a deposit down on a house, well, you can lock in 5x leverage on a house at like a negative real rate. Sign me up. But the poor guy who like just works and doesn't have the ability to save a lot, can't buy these assets, just gets screwed. But in a world where that guy can just go out and buy a little bit of Bitcoin, it's just sort of like no obstacles to doing that. Like that hasn't existed before. That didn't exist in like Weimar Germany, obviously. Like if Bitcoin had existed then, like things probably go down differently, but it didn't. Like they typically these sort of like assets that are inflation hedges are sort of like protected. So in that particular environment, you should see something like Bitcoin do very, 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 very well because you are going to have these negative rates. You're going to have this like systemic debasement of the general populace overlaid with this asset that everybody can kind of regularly buy now, unless these sort of things we've talked about in the past come through and we try to like repress access to them, stacked with like probably fiscal stimulus on top of it. Bullish, TLDR.
Yeah.
Very bullish.
And we're making one big, and I know we're trying to wrap soon, but like we are making one big assumption that like long-term inflation will run hotter than 2%. And that is my like main base case prediction. I mean, very, very quickly and very simply, like deglobalization means broken supply chains and insourcing, which means higher cost of goods. Like fragile energy markets and asinine green energy policy mean baseload energy is more expensive, so manufacturing becomes more expensive. Like I think like the German manufacturing industry is just gonna get fucking crushed. Can you short BASF? I don't know. Anyway, but the biggest thing is like
play with coins, sir.
Yeah, sorry. They're a massive like raw material producer. Like the raw chemicals. They used to have this commercial like you buy this from this company. Well, BASF is it produces the chemicals and the features, the raw materials that go into the products that It was a pretty widespread commercial. But anyway, they're first to suffer because literally the electricity they need to run the machines is just too expensive. And then lastly, like labor participation is going down. Baby boomers, I think this is the year when we start to see them like peel off, and then this whole great resignation that COVID kicked off is not necessarily going to bring labor back. So like those three things mean that inflation may come down over time, but it's not. I don't know if it's going to go down. Sorry, Kathy Wood, down back to 2%.
What if that doesn't bring inflation down though? Like what if the boomers just hand off this pile of wealth and they hand it to a bunch of people who now have a risk tolerance, who don't want to be sitting in bonds, and then they suddenly realize that all of their inheritance is being debased at like 2% a year.
Right. So at the same time, millennials are coming in and they're just in this like primary investing age. So while boomers are taking money out of assets, and I think millennials are going to put them in, they may put them in a much crypto-friendly asset allocation than boomers.
Certainly possible.
Yeah. But I like your comment about real rates, negative real rates. Like, I think that's something that like most people should do a few Google searches on and understand that like when you have negative real rates, it basically forces people into riskier assets. And, the more negative they are, it forces them further down the thing, which ultimately may lead them at something like Bitcoin and crypto in general.
Mm-hmm.
Yeah.
Yes. Well said. Understand why your Bitcoin goes up. It's not because you put laser eyes up.
Is it bad that I just kind of
Satoshi
like started to understand this in the last 12 months?
I don't think anybody
Okay.
understood this
the whole
for
world.
12 months. So you're in good company.
Good shit. So you still put laser eyes up?
I never put laser eyes up. That shit was
so
dumb
you're
and
stupid.
cringe from the start.
All
Stand
right.
by it.
Great shit. Great episode, guys.
Yeah.
We'll see you guys in politics.
All right.
Peace.
See ya. Peace.